Yes, so I'm in, actually, let me just pull it up here. So I've just taken a gold long, just a short-term one, just buying off the dip today.
Okay.
As for yen crosses, I'm still sat in Swiss yen. This is, position trade, so I'm looking to be in this one for maybe the next year, possibly.
Wow. Yeah, I didn't know you were in the Swiss yen trade as well. We're both in that. That's awesome.
Yeah. So Swiss yen, still got long positions here on silver. So I'm looking, silver's a bit interesting actually. So because I've got 3 positions, I'm looking to take the top 2 positions off when we reach the previous highs around 34.29. And then I'll leave on the original or the lowest position to just run. And that will be, again, probably to around $40 possibly. And then last position is dollar Swiss longs. Obviously looking again for a position trade here on the Swiss neutral rates.
Love it. Well, I wanted to talk to you a little bit about the yen concept. I like the silver trade, of course. We could talk about that one all day long as well. But before we had our previous segment start, I was looking at the Japanese economic heat map. I'm not sure if you've played around with this on your side on the Edge Finder yet, but it's been pretty cool. The yen strength, I talked about this at the beginning of the stream, and I wanted to get your thoughts on this too. I typically look for the quote unquote easy or obvious trade that's playing out in markets, whether it be currency market, whether it be, metals or indices or stocks. Right now, it seems like the yen strength story is pretty strong. It's not a guarantee that it keeps going, but I just wanted to give a bit of a checklist like I did earlier. GDP growth, stronger than expected. Manufacturing missed, but that's pretty much where it ends. Everything else is strong for the yen. Services PMI, strong. Stronger than forecasted specifically. Retail sales, stronger than forecasted, right? Inflation, hot. This has actually been what the Bank of Japan has been waiting for to start hiking rates, is they wanted to see an uptick in economic data and it materialize into inflation. And so they're seeing that. It's very different than what we see in the West, where people are like, we want to get rid of inflation. They actually want to see some sustained, prices driving higher, which gives them kind of a more confident view to raise interest rates. Unemployment rate also ticked lower, which they already have very stable and low unemployment. Look at this, 2.4%. Then you have employed people upticking as well. The reason I point that out is this is kind of the obvious trade right now, isn't it, James? And it doesn't mean that it's a guarantee that it's going to work. So I don't want to phrase it as like, oh, obviously it's just going to keep going. But do you typically look for something similar, like just the clear winning idea?
Yeah, so I've spoken about this quite a lot recently. So I'm sure Nick, my whole thing for the past 3-4 months was essentially just long the dollar, short the euro. That was the obvious way to go, and it was really just the easiest money for the way I trade anyway. Now I'm kind of not really in favor of that. So now the next one is the yen, as you said. But to specify on the Swiss yen, we've got 2 central banks, so the Swiss National Bank and the Bank of Japan, essentially doing the opposite thing. So it provides, a very cut and dry trade idea at the moment. Obviously, things can develop, things can happen, but right now, as things stand, I just see it as the most obvious choice.
Yeah. And it's like, it's almost so simple, but a lot of times, I want to show you an example of institutional money doing the same thing. And I know you're aware of this. I meant more the proverbial you, as in the audience, for a second, because if we take a look at the COT data history on something like gold, right? This is an interesting theme. Gold has just been this monster asset for a long time. And look at this consistency that institutional money has done. You talked about the idea of like, oh, maybe holding yen long for a year. I mean, that sounds maybe crazy to people who are day traders, but look what institutional money has done with gold for the past several years. They're just long and adding on dips, bulls just to no end. This percentage basis has been consistently over like 75% positioning net long for going back since at least March of last year. We have consistently seen at least a 75%, actually greater than 78% long proportion ratio by institutional money. This whole time, if you had used this as your sole indicator, would have told you do not short gold one time. Had that been your base case, look how strong that's been. I mean, so institutional money seems like they take the obvious trade to an extreme. They just trend follow that baby until it no longer is there. And maybe we can learn something from that.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Yeah, absolutely. I mean, they are the one that they create the trends. They're the ones that drive the trend. I think it would be a very naive or a very silly thing to do to try to fight against them, at least on a long-term basis. Obviously, day trading, scalping is not quite the same. You can catch fluctuations. But yeah, if you're looking to hold a trade for 6 months, a year, even just swing trading for a couple of weeks, I think COT it's a great way to catch on to what they're doing and just sort of have their scraps in the market, really.
Yeah, I actually love COT data, especially for position trading. If you're somebody who's like a little bit longer term swing trading or longer term position trading, COT data can be so powerful because you can just see the trends and you don't have to worry so much about pinpointing the timing. Now, COT data can still be useful for lower time frame traders. Like this latest COT buys and sells section, I find to be actually quite interesting for lower time frame stuff. Like you can see they added a bunch of silver here recently. That's part of the reason I like the bull case for silver right now. So just something to think about. This COT data, sometimes people say, oh, that's lagging information. Well, yeah, if you're trying to scalp it, but if you're trying to use it as like a confluence factor, trying to understand what generally big money, smart money is trying to do in the markets, you can kind of pick up on those trends, and they usually take a lot longer to play out than people think. I mean, look at gold has been the winner on this list for a very long time in terms of positioning. Gold, silver, Nikkei, US oil, US dollar. Those are your most bullish institutional assets on a long-term basis. On a short-term basis, you've got that on your screen here. You can click through that yourself, of course, if you have a copy of the Edgefinder. But that's the idea. So you also mentioned you're looking at euro dollar. What's the update there on EU?
Oh no, yeah, I'm pretty much flat on euro dollar. So the situation, as far as I'm concerned, is I have absolutely no idea what's going on with Ukraine and Russia at the minute. So obviously we had the peace talks, we had talks of peace talks, but it seems like Trump has done a little bit of a I don't even know what the word is, like maybe a Uno reverse. So he's claiming that Zelensky is the one that started it. I'm not going, obviously not political, but that's what he's claiming. He's calling Zelensky a dictator. He's very publicly and very heavily siding with Russia. And it seems like there's quite a lot of tension now between Europe and America. So just on that basis, I don't know if I really want to be going in either way on the euro. And with the dollar, it's just not in a position where I want to really go long in the short term anyway. I mean, the heat map on the Edgefinder tells us all we need to know. It's definitely not what it was back when I was heavily shorting euro dollar. So if we just pull up the heat map, just give me a second here. Where has it gone here? So this was, at one point, this was pretty much all blue, and it's now essentially all red. So manufacturing is okay. Unemployment rate is okay, but that's about all we've got. ADP obviously is blue, but I'll be honest, no one really cares about ADP. Everything else is not really what I want to see. So yeah, the US dollar long narrative is gone as far as I'm concerned. And regarding euro, I just need more clarity. I need to just wait and see what happens, really.
Yeah. Well, a couple of weeks back, we were speaking together just about the concept of Swiss yen. A lot of people resonated with the carry trade scanner. I had no idea that would be so popular, but you actually were the one who were pointing that out, in terms of Swiss yen, the cost efficiency there. The swaps are minimal. I've been holding Swiss yen for several days. Cost is not so bad for the trade. But again, if you had tried to take dollar yen short, obviously you'd still be really happy with yourself because dollar yen's dropping like a rock. But Swiss yen, in my opinion, continues to look like a great opportunity to see yen strength play out. And I like also the long-term trend. If we just scroll out on this chart, there is room for Swiss yen to have a multi-month downward move and still be giving back some of the gains that it's had in the last few years. I mean, if we just go super long-term for a second and just say, well, let's not go to 2009, but let's just say like from this kind of 2019, all the stuff we've seen in the last 5 years, even just a 50% retracement is a 2,300 plus pip movement. So, I think it has plenty of room to normalize that the yen, the divergence between central banks is now completely turning around the other way. The Bank of Japan was super dovish for a long time. Now they seem hawkish, and other banks are trying to be more dovish. If that plays out, Swiss yen could go much, much lower. And when it comes to this stuff, James, you and I, we're not fortune tellers, right? We don't know the future of what's going to happen with the world economy, but we can at least acknowledge what the heat maps are telling us right now. I mean, you even just said, I love the way you just said that, the dollar story has kind of broken down a little bit. So now you're on to yen. Now you're on to something else. It's like we can't know the future. We can only trade what our systems, what our approach to the market is telling us to currently look at.
Yeah, well, last thing I was calling for parity on euro dollar for by the end of Q1. I was saying that sort of late December last year. Now, obviously, it's changed. I no longer think it's no problem having an idea. So, for example, right now, I might be holding gold to around 3,000, but something could happen in between then, and that idea, it changes.
Was the euro and US dollar, because we were moving in this sort of a descending channel, so I was expecting for the momentum to potentially go up with this overall uptrend if we zoom out a little bit. So the uptrend that we had right here looks like we're not getting that sort of strong momentum I was looking for, so I'm being patient. EJ is looking okay as well. It's definitely trending down, but a lot of momentum right here. So it's looking very, very nice. Pausing a little bit. I would like to see it continue down and then look for sell setups. The next one for me would be the Aussie pairs. Now, we did have the interest rate decision from the RBA, and we did have a rate cut. But if you looked into the report, or if you look into the report a little bit, you'll actually see that they flagged inflation as a concern. So they're actually very concerned about inflation, and their inflation projections have been raised, which is hawkish. So the actual event was dovish, meaning bad for the Aussie, but the future projections, which is what really matters, are hawkish, and that's bullish for the Aussie. So starting to break out to the upside of this channel, but again, not the sort of momentum I would like to see. So fundamentally, that would be a bit bullish, the things I just mentioned, but I'm still looking for the technical confirmation. Of course, AJ is looking pretty weak, as well as EJ, as you mentioned before, the JPY pairs. So the Japanese yen has been very strong recently, which is good. I mean, for us trend traders, that is very good. Pound US dollar is just super flat. I'm not seeing any interesting price action or interesting fundamentals. And NJ is also a bit weak. So my chart of the day would be the euro and the Japanese yen, because it has a lot of selling pressure, looks the best out of all three of my JPY pairs. And I'm looking to sell. So looking to sell the euro and the Japanese yen.
I love it. Yeah, it's interesting. I would say that right now in markets, you've just got some stuff that is just really not moving at all. And then you have other things that are just trending really well. Yen pairs seem to be trending pretty strongly right now. Metals are also trending pretty strong as well. So it's an interesting time. You compare that, for example, to the S&P 500 or something. It's really just been range bound and not making much of a move anywhere. So really interesting. Yeah, euro yen, respectable chart of the day for sure. Miko, what about yourself? What's top of mind? What are you watching right now?
I quite like some of the USD pairs, USD CAD in particular. to the downside. So I am looking at some selling opportunities. So I'm still pretty bearish on the USD as of right now. I haven't seen much retracement. It's been a bit slower this side of the fence, but I do really like the opportunity. It looks like maybe dollar CAD could be in for a bit of a downtrend. We've been trending to the upside for a while. Looks like USD is a bit, dollar DXY is a bit weak as well. So I wonder if we could see a bit of a trend form. And we had some really nice momentum. So the plan is really just looking for the continuation of that, and a retest of that range is where I'm looking for entry. So dollar CAD looks pretty good. Same with Aussie dollar to the upside as well. Pretty much the same opportunity in the opposite direction. Not too sure if I'll get the trade for this one because it's already looking pretty bullish. But it's the same kind of idea. Really nice move to the upside. Again, looks like potentially Aussie dollar could be looking to turn around. How far? We will see, but again, I like the idea of looking for retests and more upside there. So still looking to see if I can take advantage of some USD weakness.
Yeah, makes sense. I mean, the dollar has been interestingly kind of turning around here recently. Like it had this big blow off kind of top, and then now looking like it may be forming some kind of head and shoulders pattern based on that idea. If you get kind of a retest into this area, I would be curious to see if sellers are going to really take this and, like you said, maybe turn it more into a sustained downtrend rather than kind of, we've been choppy, we had this little move. The question is, are we going to get some follow through here? Will be very interesting to see. And you know, Marko was just talking about with the RBA, this concept of basically a hawkish cut, meaning they cut interest rates, but basically pointed out that inflation is still problematic. And that seems to be a theme a lot of places. We also had UK CPI tick up to 3%. So a lot of places are seeing inflation coming back into the picture. So I don't know. I think that a lot of people think like the US, the Fed is kind of untouched by weakness at all, but we're starting to see some of that as well, and even the US dollar. So really interesting just to see where everything is going in terms of currency moves. What about metals? I want to come right back to Miko because Miko, you always talk a little bit of both gold and silver. What are your thoughts here right now? Metals, gold's been ripping here recently. Is it time to cool off on gold, or can this keep going?
Well, a bit of both, to be honest. I'm still very, very bullish on this one, particularly at the high, because if we can break this well, that just tells me that the buyers are very much in full control. So at the moment, we're having a little bit of struggle at the high, but if we can really persist and go and break through that, that's kind of the signal I want to see for gold. And then that will tell me, okay, buyers are in control, and I'm still looking for a break and retest and more upside. If we continue to mess around at the high there, I would just kind of hold off. Still would be bullish. The trend is still very much up until we start to break through some lows. I won't really entertain the idea of shorts. So still very much focusing more upside, but I want to see a more confident break of that resistance before looking for entries. And we do have that big 3K level there as well. So that could be where price is potentially drawn towards. And also silver as well, looking bullish too. Now, we had a really big rejection on Friday, so I was being careful about taking any opportunities with this one because there's a really big level of resistance here. We had a big wick on Friday. Price came crashing down, same with gold as well. And I'm looking to see if we can get a push back to 34.8 over there. So that's the idea with silver. Looks like we're getting a break of that resistance. So pullbacks and upside look pretty good. I'm actually more of a fan of silver, actually. In terms of trading opportunities, so something like that would definitely interest me. But at the moment, both still very bullish. So yeah, more upside looks like it.
You know, Miko, I'm long silver currently, and you referenced that big reverse that we had on Friday, and that was the most for me as a trader. Like all three of us, we know we show up, we do the same thing over and over. But that was emotionally so frustrating for me on that Friday because I have a pretty good sized silver position right now running. And it's going good now. But on that Friday, I benchmark my own trading against the S&P 500. That's something I like to do. And on that day, and what I mean by that is like compare my returns to just passive holding S&P 500. And so on that day, silver was up 3%, and at one point the S&P was down 1%. In the morning, I was feeling like a hero. I was like, "That is a spread, right?" So I'm up 3%, and S&P's down 1. By the end of the day, they flipped roles. Silver was down about 0.7, and NAS or S&P I think was flat or slightly green. But the frustration of that just goes to show it doesn't matter how long you trade. Certain moments in trading are always going to be frustrating, and to have that kind of like, oh, this trade is breaking out, this looks excellent, I can start trailing stops, I can lock something in, for it to come all the way back was incredibly annoying, and I ranted about it for way too long in my videos. But we've rounded off. Silver still looks strong to me. As long as we continue to hold these this low here, I actually would love to see if we can get a strong close today. I will be looking to trail stops further and just lock in a little bit more. But a lot of the trading community seems interested in silver right now because, again, gold has already kind of had this massive run, but silver could perhaps be ready to play a little catch up. So we'll see. We talked about that a lot last week with Ethereum and Bitcoin. So so Marko, your thoughts on metals. Gold looks phenomenal, but again, how do you see it? Would you, if you were to trade it, I know you don't trade metals that much, but if you were to trade gold or silver, would you select one or the other? How would you see it?
Yeah, so for me, I think a lot of people are afraid that gold is kind of at the top and that it's going to reverse, and catching tops is very, very basically very, very dangerous. So this can really go on for a long time. Maybe a bit of a pause will happen. It is possible, but this does look very, very bullish. As a technical trader, I do like the gold chart a bit better than silver because just the general momentum and the way we are breaking the highs. So I do prefer gold, but as you mentioned a couple of times, silver does follow gold. So if gold has already moved a lot, maybe silver still has some room to move and catch up.
Yeah.
But yeah, just the general assessment, this looks very bullish. I don't see any signs of stopping. Yes, we had a big daily red candle, but we didn't get a continuation. So the next candle wasn't red and it wasn't big. Instead, we did continue going up. So the metals do look very, very good.
Sure. So we were just talking about this concept of relative strength, and if you could hear my phone going off, I'm sorry about that. So we're talking about relative strength, talking about gold versus silver, Bitcoin versus Ethereum. Marko, while you're sharing the screen, let's say you have, because we can take it back to currencies. This concept of relative strength is a technical concept, and it's something relevant to all markets. Euro and pound. Let's take those two, for example. They typically move together too. Not all the time, but if we were to go euro dollar and pound dollar, they typically somewhat move in the same direction. Let's just say, actually, let me just gonna pull up euro pound for a second. So euro's been the loser in that combination here in recent weeks. So if you're to look at that, does that play any, do you prefer to go for the winner in a combination like that? Or do you prefer to play the catch-up trade? Because on a technical basis, what that's usually going to end up being is the lagger is going to be the one that is kind of not trending as aggressively, and the leader is going to be trending more aggressively. Do you have a preference that you tend to go for? Right there, you just kind of pointed out like gold looks a little bit better. Is that generally how you see it? Like you'd rather play the winner than play the one that's kind of not as strong?
I would say it depends on the data and backtesting. I would say with gold and silver, I would be fine with silver playing catch up. And because I trust silver and it's been an instrument that has been traded for a long time.
Dollar index heading lower. That's totally good by me. If you're looking for a turn on euro dollar, I still think that 106 is a firm resistance level. So if anybody is long, I understand like long and dollars getting weaker, that's fine. But if this area turns, so let's say we come back up here into this 105.50 to 106 zone. If that turns back south, I could see that stop loss above, retest the lows, target 1, possibly a push into parity, target 2. That depends on the dollar catching a bid and going higher. I don't know if that's going to be the case or not, but we'll find out. So I'm not going to short the euro dollar. I think the best place to be watching would be if it breaks that trend line. But I think there's a lot of resistance to that 106 handle, which is about the equivalent of the dollar index turning around the 106 to 105.50. So 106 right in here, 105.50 right in here. I would watch for that zone to offer support. So 106 to 105.50. See if that's going to offer up some support. Gold, fine. Silver, fine. Oil, probably good for a directionally neutral strategy. Bitcoin still accumulating. Markets today, nice little red candle. Seems like my technical analysis from connecting this high to so far this high is looking fine, looking respectable. Maybe we're still not able to make convincing higher highs. Not yet. Look at the weekly time frame. I still think the bar count is relevant. Look at the weekly chart. If this weekly candle gets much larger, then yeah, we're probably dealing with something like this. Lots of this, lots of this, lots of this. Now, a lot of traders could look at this pattern and see, like, I think this is a rising wedge. Well, it can be a rising wedge if it actually breaks and falls back to where it started. That would be a corrective move on the rising wedge, and then we would look to scoop up, some type of retracement. This is a fib that I have on my chart since this bottom in 2023. Okay, just one fib, like pull back to the 23% or 30% or 38%. Like that pullback zone would offer a pretty awesome discount if we get it. If we don't get it, this is another thing that rising wedges can do. They can do this, they can do this, they can do this, and everyone's like, oh, it's a rising wedge, I'm going to short the market. And it goes like this. Breakout, and it doesn't stop. It just blows it up again. I don't know. But we will probably be staring at some of this for longer. Just saying. So, cautiously bullish, as I keep repeating. Dollar Swiss, no trade for me. Dollar Swiss, I'm already out. Long positions close out at 92. I'm not interested in this unless it comes back down into 85 or 86. If we come back and revisit these lows, then I will load back up and take the range trade. If it does break the highs, I'm okay being long. I think there's a big pocket there that can get filled. I just don't love buying the highs. So I would prefer, and maybe this is not a terrible play. You still get positive swap on it, maybe getting like a 38 to 50 to 618 swing, and then look to see if this in fact goes higher. But if you're willing to take a swing trade, I'd also be willing to just dollar cost average into the entire range lows. So it's not a bad trade. I guess the question is, can we find a level support, come back to the highs again, and actually have a run higher, but getting a discount? I just don't want to buy the breakout highs. Okay, looking pound dollar for a long-term trade. What direction? I'm looking at pound dollar to be, a little bit more correlated to dollar index. So I think pound dollar is looking fine for a potential short in like the 127.50 to 128 zone. If you look at this area for resistance, and then you're looking at a shorter-term trendline break to see if you get some confirmation to roll over, stop loss above the swing, and then head down. How much lower? I'd say between like 120. I was actually surprised we got up above 3,000. We got this like 3,400 something, but I think between like 120, 130, we might just be range bound on this pound US dollar. So I'm not incredibly bullish on this one. I'm actually looking on the smaller time frame for this thing to turn south. This would be a pretty clean trend line break if we get it. Something like that. Just connect the lows. If we get on the right hand side of that trend line, as long as price isn't making some like crazy run above this high, I could see this area offering some resistance. If we start to break that structure, stop loss above, and then go back and target the lows. If we go lower, move the stop losses, but 120 is probably my target. Okay. The only way I'd flip my trade on this one would be that we're seeing a lot of dollar weakness, and this thing comes ripping up above this high, and then there's a nice little like pullback, and then you go longer term to revisit 3,500. But I'd have to see it break that high convincingly. If it doesn't happen, then I think this is actually a short. Okay, good question. I think that is going to do it for right now. Any other questions, thoughts? Big drop in futures this morning. So 9:30. Yeah, that was just a big fat breakout at 9:30. Price has kind of stabilized since then. Let me move this to that 930 candle. Right there, just a pretty simple trade. Same thing on NASDAQ futures. That is a lot of movement there in 15 minutes. So we'll see. Let me actually zoom in. I'm going to go into like a 60-minute chart here. So, I mean, there's potential support, but man, we got to hold. I think my concern would be like if this breaks this low, there's clearly from all-time highs, there's plenty of space to still have a range-bound trade, and we come right back to these, you know, nasty deep-seek and tariff lows. Right? So I would keep a close eye on this support, and if this support holds, then sure, we can play around with this 1 hour, 15-minute candle from today. But if we break that level, we put a price point there, that would be a break of around, if we broke below around 6,100. 6,100 or lower with a convincing break candle, then I think we have room to flush and revisit some of these previous lows. This could be just some big old like sweeps and grabs at these lows, which I'm okay with. That's why I'm hedged. All right, for the remainder of the day, probably, I don't know, maybe a limited price action here. Another flush lower is actually okay. We had a push, pullback, push back down to the lows. Is this a indecision day from now on? Like maybe that's indecision for the day, right? Time will tell. But if this is high, low, little wave structure, and we're still going to sell off, just be aware of like maybe a flush into like 60, 50 today or tomorrow. Tomorrow's a monthly expiration. Levels I'm watching on the SPY, either we get back up to 615 for the week, or we flush down hopefully to like 602 or lower, 602 to 600. So right in the middle. If there's enough volatility to carry us through tomorrow, let's see what the follow through is. I'm positioned for both. I've got a profit trade if we get 615, or I need it to be greater than 612 actually, or I've got a profit trade that's actually a big reward to risk. If we get down to 602, 601, I turn like 80 cents into maybe $3 to $4. So we'll see.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.